Hey everybody, welcome to My Stock Trading Tips. My name is Andrew, and in this video, I want to focus on how I trade. Now, if you've watched any of the videos so far, you'll probably start to see that what I've been doing is trying to lay a foundation so that if you're a beginner to trading, my method of trading, once I start talking about it, would actually make some sense. So what I'm going to do is, in order for you to really understand what I'm talking about, I'll switch from this view and I'll get to my computer and pull up the charts so that you can really see what it is that I'm trying to explain. Now, before I do that though, I really would like to thank all of you who have subscribed to the channel thus far. If you're new to the channel, if you just found this video, if you like it, please take the time to actually click that like button. And if you want more information like what I have to share, then definitely subscribe to the channel. Click that little bell down there so that you are notified whenever there's a new video. As long as I see that there are views on the video, I'm not looking for a ton of views, but as long as I see that I'm reaching people, then it lets me know it makes sense to keep making these videos. I don't have this channel to try to make money. The way I make money is by trading. So, all right, enough talk. Let me get to the charts. All right, so my trading strategy simply involves using moving average crossovers. If you're not familiar with moving average crossovers, then you definitely need to check out my video where I talk about 4 terms that every trader should know. And at the end of that video, if you're still not if you still don't understand what it is, then definitely Google it. Go to a site, Investopedia.com is a great site for picking up terminology and understanding various strategies. So anyway, I pay attention to stocks where there's a moving average crossover that turns into an uptick in price. Sometimes I will stay in that stock and ride the trend, or other times I will do what's called scalping. Scalping is just taking advantage of those quick price movements and maybe trying to capture $1 or $2, and you're not really worried about staying in the trend. Okay, so let's take a look at Micron here. The ticker is MU, and I noticed here that when it runs up dramatically. So back here in September, it was at a low of $31.65, and then it ran all the way up to a high of about $50. Almost a $20 move. Awesome. Well, I notice here it has a crossover. And if I zoom in, you can see a little bit better. It has a crossover. But this crossover really is not a quality crossover because, number one, the stock price is pretty much moving sideways. Okay, we don't have a significant uptrend or a downtrend. When the crossover occurred right here, it was really at the beginning of a downtrend, a short downtrend. Okay, this was the uptrend. Remember, an uptrend is simply a combination of higher highs and higher lows. So the price is constantly ticking up. Well, this crossover came on the beginning of a mini downtrend. Okay, there's a downturn in the price here. So this was a fail. It was a failure. But then I noticed here, this one. Let me draw a circle so you can see. So here's the crossover, and it went, let's take the high, was about $48.32. After this crossover, it ran all the way up to $63.60. Huge run up. Okay, the crossover was the signal. It was the catalyst. It let us know, and maybe there was some news that took place during this time. I don't know, but the crossover simply says there's a lot of interest in this stock. There are a lot more traders and investors who feel like good things are happening for this company and they want to be involved. Notice the quality of this crossover is totally different from this one because we already have an uptrend starting. So you can think of this then as a continuation. You can think of this as confirmation. I'm just going to draw a little line here so that you can see up to that point, price was pretty much following this line. Okay, So it followed it, and then we have a crossover. That's confirmation that, hey, there's probably a lot more where this came from. So the risk reward is probably pretty good to get involved. Now, I probably would have done a little bit of research to see, why is the price going up so much recently? Maybe there was some good news lately. Maybe they were doing a stock buyback. I don't know, at the time, but I would have done a little bit of research and then gotten involved. So because of this, because of how dramatic the price increase was after a crossover event, I kept my eye on this stock and I noticed that it crossed here in May. And as soon as I saw that it crossed, I immediately jumped in because it had already begun an uptrend. Okay? It crossed over, so I'm thinking we should see a continuation of that uptrend. And I want to be involved in that. So I got in around $54. Okay, so I got in this candle right here, around $54, and I was able to ride it literally to the top. So I got in here, and I was able to ride it to the top. Now, the awesome thing, this doesn't always happen, but there was some good news that came out, and that's why you see this gap. All this means is I got in at 54, I wrote it up here, I'm up $2. I didn't sell because I knew, I didn't know, nobody knows anything, but I felt like it had more room to run. And overnight, some good news came out, and this is what we would call a gap. So it gapped up. And so I went from 54 one day to 2 days later, the price, the lowest was 58. So I woke up to a $4 gain. And then I was able to ride it all the way up to the top. Now this doesn't always happen to me, okay, where I'm able to take it all the way to the highest price. But fortunately in this case, I was able to do that. That's a $10 trade when it was all said and done. It was $10. It was awesome. But it all started because of this moving average crossover. Okay. Now since then, it's dropped. Notice it has another crossover right here, but this is not a quality crossover because it's in a downtrend. So I don't want to mess with this. Okay. This is going to fake me out. So just because it crosses over doesn't mean the price is going to jump up. We have to pay attention to what the price action has been before or prior to the crossover. Once we notice that the price has been going down, then a crossover may not be enough for the price to all of a sudden just turn around and spike up. Okay, this one price had already been going up, and then there's a crossover. That's confirmation that there's a chance things can still continue on an upward trend, and we want to be involved in that. Let me show you another one real quick. CTSH. So CTSH was another one that I got involved in, and what I do now is I pay close attention to all the times when a stock has a crossover, and I look to see how often a crossover precedes an uptrend or a continuation of an uptrend. So crossover, it ran up. Crossover here, it ran up. Now it fell off. If you'd been able to stomach all of this, you could have been involved in all of that, okay? Because this crossover here was at a high of $72, call it $73, and it ran basically $12, okay? But let's say there was no way you could have handled that. It still ran up to $80, just about, okay? So that is still about an $8 run, which is awesome. Here, it had another crossover, but price was going sideways at this point. So that's why we had a fail. But here, notice it's coming from a low. It's doing a lot of junk, but we have a crossover that came after, or that's part of an uptrend. And so I decided I was going to take this trade. So I did. It ran up right away. I didn't sell, so I had to deal with all of this. So I was negative for a little bit, but then it ran back up. And this is where paying attention to price action in the past will help you stay in a trade too, because notice what it did here. It ran up, it dropped down, and then it ran back up. So same thing. So it ran up a little bit, it dropped down. I didn't panic, I stayed in it, and it ran back up. So I sold somewhere in here. Okay? So all I'm doing is finding stocks that have had a moving average crossover. Specifically for me is a 15-day crossing above a 30-day moving average. And I look to see on the chart how many times in the past year the moving average has turned out to be a signal for the beginning of an uptrend or the continuation of an uptrend. And as long as it happens more often than not, then I go ahead and I take the trade. But I also pay attention to whether or not the price is going sideways or if it's already involved in an uptrend. Okay, that's it. Now I've been working on refining this a bit. You can definitely take advantage of technical analysis, and that will help you stay in trades a whole lot longer instead of just scalping. And that's something that I've been working on a whole lot more lately. But this is pretty much this is the gist of how I trade. And these moves, I'm able to usually get $1, $2. Now you have to think about your share size. I keep it simple. If you buy 100 shares, then if the stock moves $1, then you've made $100. If you buy 500 shares and it moves $1, you made 500. Okay, so that's how I look at it, and that's how I keep it very simple. I keep the math very simple. That's really it. As time goes on, I'll do some more videos where I'll analyze some trades that I've taken. Like I said, I am refining this, so I'll do another video to show some of the other things that I'm looking at with moving averages and other technical indicators. So hopefully this was beneficial to you. If you liked the video, definitely click that like button. If you want more information like this, you want to see more videos like this, then definitely subscribe to the channel and take it easy.